Okay, and we're back. So we're talking about the buying and selling of currency pairs, how to enter the market, the different ways that you can enter into the market. So first ones that a lot of people do, and I do personally, is the market order. Okay, so where you put an order to buy or sell at the current market price. So it enters the trade immediately for you. Say for example, right now you're looking to buy, you can just click a buy market order. It will get you into a trade at 1.13305. It gets you in straight away. If you say that you expect the market to drop, you expect prices to drop, you could put in a sell market order and it will get you in at 1.13300 and it'll get you in straight away. So market orders, if you're taking notes, make sure market orders gets you in immediately. Whether you're buying or selling, it'll get you in at the current market price. On the other hand, limit orders. Limit orders is going to be good. Limit orders is going to be good for a lot of you who have not much time to look at the markets, right? If you have not much time to sit there and watch all the time, you could put in a limit order, which is an order to buy or sell at a certain price. Okay, so you could do your analysis, put in your order, leave it, and then just let it enter that trade if the prices get to that point. So in this scenario, we see a buy limit at 128.43. What this means is price would have to drop from 129.50 below 128.43, go back up, and then a buy trade would be executed. So that's the buy limit order there. Okay, I'll just repeat this. This could be a bit new to many of you. You put in a buy limit order when you don't have much time to watch the market because you know that it's going to move a bit more before you want to get into a trade. So in this example here, you could put a buy limit order at 128.43. What will happen means that you would have to let the price drop below 128.43, go back up. Once it goes back up above 128.43, a buy trade will be entered at 128.43. On the other hand, if you're looking at a sell limit, you think that if it hits that point, it's going to start turning back down. In this scenario, in this example, you could be entering a sell limit order at 131.69. What this means is you're expecting the market to go up above 131.69, turn back down, then your sell trade would be entered. So you have a sell limit order there for it to go up, turn down, enter that trade at 131.69, and then you'll be looking for it to move lower. Okay, so remember that turn back down. This is when you have a sell limit order. On the other hand, a buy stop. Okay, so we were talking about buy limit, sell limit. Now we're talking about buy stop. A buy stop is an order to buy, or sell stop is an order to sell at a certain price, which means that in this scenario, pound yen is at 130.33. You're not going to sit there and wait for price to move up towards 131.69 before you can click the market order to buy. You could put a buy stop order. What this means is it will go past go towards 131.69, and it will buy at that point with the expectation, with your analysis and expectation that it will go higher off 131.69, higher towards your next target. Okay, so this is mainly a lot of times when people use this is to take advantage of a momentum move as it goes higher. Once it breaks past one point, they think that it's going to keep going upwards. So you want to use a buy stop when you're looking at big strong moves upwards, or a sell stop if you're looking at a big strong move downwards. Okay, again, in this scenario, if your sell stop is at 128.66, what it means is you're looking at price being at 130.33 for it to drop past 128.66. If it goes past that point, you believe that it's going to keep going a lot lower. So you want to enter that trade at 128.66. This is not that reverse, this is the continuation down. Okay, so as a summary, comparing the three different kinds of orders, market order is to buy or to sell at a current price, at the current price. A limit order is to buy or to sell at a requested price, means that it's going to go up and then turn back down where you enter that trade to sell, or to go down and turn back up where it enters that trade to buy. A stop order is to buy or sell at, so a buy stop or sell stop is to buy or sell at a current price upon reaching the requested price. That's a bit nitty-gritty to deal with, but what it means is that it's going to buy at the current price once it goes towards that point. So once it drops lower, at that point it will start selling all the way lower, or when it goes up, it will buy, and then for it to go any higher up. I hope that makes sense to you. There's three orders that you can use. A lot of times for me, because I'm looking at the market most of the time, I'm on the computer, I'm looking at it all the time, I actually prefer to do a market order because I want it to enter a trade straight away. I know the reasons why I'm getting into a trade. I know the conditions that I'm getting into a trade, whether to buy or sell at the current price. But take note and use the limit orders and the stop orders, especially when you have no time to watch the market. You have done all your analysis, you've put in the prices where you want to buy or where you want to sell, and then you go do something else, right? So this is one way to trade with a bit less hands-on activity. This is also one reason to use when you feel that you're getting too emotional with your trading. You've done all the analysis, and this actually happens to a lot of students that I've come across. When they're sitting there and they're looking at the markets and it's shooting up, they're looking to buy. When it's shooting down, they're looking to sell. And once they've done that, immediately they regret. Use the market orders, use the limit orders, use the stop orders to your advantage, so that when you're sitting there managing your trades, use the market order. A lot of times you can do all the analysis, put in your limit and your stop orders, or your stop orders, and then not manage it, so that you can trade with a little bit less emotions without having to look at how prices are moving, which could affect your judgment at that point in time. Okay.